Hey, Jeff Santoro, Pinterest stock is up. Earnings came in up about 18.9%. Market's not quite closed yet, but it looks like it's going to be a big day post third quarter earnings. You ready to talk about the things you saw in earnings that stand out the most?
I am. This was a good quarter, I think. So let's start talking about it.
Yeah, that's important because they haven't all been good quarters over the past year and a half or so. I'm Jason Hall. This is The Smattering. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, please go to our special link, fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. Please check out that link after this video. Okay, Jeff, let's take a look at the results here.
All right. So let's use the visuals from the investor presentation to talk through some of the high level numbers here. So as you can see, Jason, revenue is ticking back up. This is a good thing to see. It's trending in the right direction, especially considering we've seen some softness in advertising from some other companies that have reported this quarter. So I think the fact that revenue is ticking back up towards it was 11% in this quarter after 2 quarters of single digit increases. I think that's good. And you're seeing on the right there, revenue is up in all of their geographies. So globally up 11%, but also up 8% in the US and Canada, up 33% in Europe, and up 29% in the rest of the world.
A
The
couple things I want to just hit on this real quick, Jeff, just to remind everybody that's watching. Pinterest is indeed an ad-based business, right? They make their money on revenue from ad sales, and they're really working hard to try to grow that ad share. They're trying to work in other things too, that like the e-commerce things that we're still trying to see them really start to become more meaningful. But the big thing to remember is that we saw Pinterest, their user base, the growth flatline, and actually they saw some declines, particularly in North America and the US, which is their biggest and like an average revenue per user. It's their most important market. And we finally have seen stabilization of their base of users, which we'll talk about some too. But the big thing is that ad revenue dollars. Like the ad market is stabilized. We saw with Meta when they reported, it's been pretty good. Alphabets, we're going to take a look at that sometime here pretty soon. Probably going to see some of the same thing. But that's the big thing. The ad part of their business, the cash cow, and growing in North America, we can't overemphasize how important that is to this business today.
Yeah, and there was commentary on the earnings call about that specifically, and it's going to relate to average revenue per user, which we'll talk about in a minute. You mentioned the active users. That was steady from last quarter, but as you can see, if you look at over the last several quarters, trending up and to the right in the right direction, slowly, nothing crazy here, but it's a pretty mature platform. It's been around for a while. So I think the hyper growth stage of users is probably past, but I'm just looking for steady growth here. And I think if they can stay high single digits for a while, maybe even accelerate a little bit, that's not too bad. And as you can see, another positive sign in all geographies heading in the right direction. One thing with Pinterest, you're going to notice there's typically high numbers in that rest of world category, no matter what we're talking about. And don't get too excited about that because that's the smallest part of the business. So it's always growing off of a relatively small base, but something to keep an eye on moving forward to see if that can become a more meaningful part of the business.
And it's not, Jeff, it's not just that the number is small, but and I think they put a slide in there too that shows the average revenue per user based on those different geographies. Maybe let's take a look at that too.
So here is average revenue per user. Now, I think this is the most important slide in the presentation deck. I think this is the most important thing for investors to keep an eye on because the focus of the business over the last several quarters has been to make the platform more shoppable. They want people to go to Pinterest for inspiration, see the thing that inspires them, and then be able to click on it and buy it directly, a quick link out to that, whoever's selling it to their app or to their website. And then Pinterest takes a piece of that transaction. And you're seeing that the average revenue per user is heading again up in the right direction in all of the different geographies. There's a lot of good commentary on the earnings call that I think is worth listening to or reading the transcript of. They give some metrics about how successful some of the things they've done within the app. Like I mentioned, clicking on something, opening up another app, clicking on something, going directly to a website. They're seeing a lot of really good user metrics around that. And it seems like that's not a lie from management because you're seeing it in the average revenue per user results as well. So that's probably, in my opinion, the best news that came out of this quarter.
Yeah, just looking at going from the beginning of the year, the percentage of growth of RP and again ARPU in the US and Canada that's a really positive sign that things are starting to work.
Yeah, for sure. Like I said, that's the thing I'm always looking for. That's the first thing I want to see. I want to see user growth and I want to see how ARPU is shaking out. The last thing I want to hit on here, that's a high level number, but I think it's going to maybe pivot to one of the things that you and I both have a little concern over. So all of the non-GAAP costs and expenses, this is really good news. So cost of revenue is decreasing as a percentage of revenue. That's obviously what contributes to gross margin. So that's a good thing.
Right. You have
But
your revenue minus cost of revenue. What's left over is gross margin you can use to cover all your operating expenses.
right. And the operating expenses, at least on an adjusted basis, are also decreasing as a percentage of revenue. So you can see research and development, sales and marketing, general and administrative, all declining as a percentage of revenue. That's good. That's showing better profitability, at least on the adjusted side of things. The adjusted side of things is what's important because one of the things that they adjust for in Pinterest is stock based compensation. And that I think leads us right into where you and I both have a little bit of a bone to pick with the company, which is that stock based compensation is accelerating. It is becoming a larger portion of the business rather than a smaller one.
Yeah, I don't have the numbers right in front of me, but directionally, I know this is close to it. Revenue, I think, was up, what, around 11% in the quarter, somewhere in there. Stock-based compensation dollars was up closer to 30%, 26, 27%, somewhere in that area. So far this year, for the 3 quarters through the year, it's up 48, over 48. So that continues to be a lag on per share returns, right? So here's how we have to think about stock-based compensation. It's non-cash. And really the best way to think about it is non-cash today, because instead of giving employees and executives money, you give them equity in the business, right? It's part of their compensation. It's very prevalent in the tech industry, companies like Pinterest. But the issue is that over time, the more stock-based compensation you issue, the more of the company you're giving away to employees. Ideally, at some point in the future, the company's going to have to spend a lot more money to buy those shares back than the dollar value they issued the shares for. If that happens, it's a huge win because the stock's worth a lot more, right? The company's been successful. The problem is if the company's only modestly successful, moderately successful, it just continues to dilute the earnings growth that we do get, the growth in free cash flow that we do get. It continues to dilute it and it leads to underperformance. So at some point, there has to be a balance of equity issuance, per share growth, but to work out good for all parties, right? For employees and also shareholders of the company too. So it's a substantial number as a percentage of growth of expenses. And I would certainly like to see it begin to be moderated a little bit.
Yeah, agreed. And there is some good news here. So I'm going to just show one more chart here. So this is Pinterest shares outstanding over the last 5 years. So you can see they've increased their share count by 27% over the last 5 years. So that's not great. You'd rather see that going in the other direction. But over the last year, it's down slightly. So it seems that they have recognized this as being something that can't continue, and maybe they're starting to make some moves in the right direction. But we like to talk about things to keep an eye on in future quarters. And to me, on the positive side, I like to watch monthly active users and average revenue per user, and those are heading in the right direction. But I also, with Pinterest, to keep an eye on stock-based compensation. So I want to see that improve over the next couple quarters.
Jeff, last thing I want to talk about here is cash flows, because again, this is a company that on a GAAP basis, there's GAAP earnings, there's GAAP losses, and then you start looking at cash flows, right? Again, stock-based compensation is a non-cash expense. You have depreciation and amortization that are non-cash. So you want to look at the cash flows too. And like the direction, the trajectory of cash flows is a really important thing. And the company is positive cash flow, which is really important because there's so many tech companies, particularly that went public sometime over the past 5 years or so, that went public and immediately began burning cash and are still burning cash and maybe aren't really built to get at this point to be cash flow positive. That's not the case with Pinterest. It's solidly cash flow positive. I will point out that through the first 9 months of last year, it generated around close to $500 million in operating cash flow. The number's about $350 million this year. So it's not generating the same levels of cash flows that it was a year ago, which says, okay, we're spending more money to accelerate growth and try to accelerate profitable growth. And like you said, Jeff, I'm not concerned about it because they're still generating plenty of excess cash. And we can see in their business results that these things are starting to pay off. Gross margins are better. Operating margin looks like it's improved. We're seeing a little tiny bit of growth in users in the US. The reacceleration of the ad market and the other things that Pinterest is doing, you put it all together and it looks like it's starting to work. Here's my last question for you, Jeff, and then I'll give my answer to it. Is Pinterest a stock you think investors should consider buying right now?
I think it's worth considering. I own it. I have not bought any or added to it in a really long time, but I'm going to take a closer look at it. You and I did a video a couple quarters ago, or maybe last quarter, where we felt like things were starting to head in the right direction. And this is just another piece of evidence that they are. So I think it's worth considering, but I also could understand if someone wants to wait and just see if this trend can continue.
Yeah, I think I generally agree. You have to don't have 2020 expectations of future growth for this company. If you have modest expectations where this is a business that should be able to grow cash flows per share, high single digits to low teens rate going forward, then I think that the price makes sense and I think it might be compelling. But same as you, I think we'd probably be better served letting them show a little more, a few more quarters of positive results before we really build out that full position.